Hello traders, Gary Wagner here. Just about 12:30 in Honolulu, 6:30 in New York. It is Monday, 15th day of June, 2020, and this is the daily report for gold and silver. We had extreme volatility in the precious metals markets. Gold actually traded to a low of 1706 before recovering. It did close lower on the day. We'll talk about what we're looking for gold to do this week, but first, to the price board. An extremely volatile trading day is the best way to characterize what we saw in the precious metals, both in overnight trading last night as well as in New York today. We are looking at August gold futures closing down by $5.50, about a 0.3% decline, 1731.80. However, it's the low that is most noteworthy. That low came in at 1706. You can see that on this daily candlestick right here. Similar action in physical or spot gold, 1724.80, declining roughly $4.85 on the day. We did have a mixed bag. Platinum traded higher by $7.40, 826.40. Silver traded higher by about 4 cents at 1752. Again, it's that low that is very, very exaggerated, 1701 in the case of silver. And palladium gave up $2.10 at 1936.40, and that's all with some very, very strong tailwinds from a weaker U.S. dollar, down by almost 0.75%. This first chart is a split chart showing gold on the bottom, U.S. dollar index on the top. We can clearly see a couple of trends that had developed. The dollar weakness is obvious as it traded from 100 down to about 96, 95, 84 to be exact. We did get a couple of up days at the end of last week, and today we had a further decline. If we break 95.84, my belief is we could see the dollar index go as low as 93.95. We're looking at a short-term chart of gold, 240 minutes per candlestick. We also have the MACD in the lower part of the screen. We can see that that is gotten to be overbought and is certainly indicating further declines in gold pricing. The other thing is that I've drawn in a very simple line from this top here, and I did this a while ago, to this top here. And as you can see, the lows that came in, even on an intraday basis, actually hit this line, found support, and then traded back above it, closing just above the 0.78% retracement, 1728.40 at 1731.80. Traders, the key right now is that gold is still range bound. It did close lower on the day. It had an extreme low at 1706. However, it is still trading above the 50-day moving average, and that's a pretty critical mark. But what is most noteworthy about the range today is that the open and close are still absolutely within the support and resistance areas that we have indicated with this line here and this line here. And as you can see, the range continues to narrow, and we are approaching the apex of this triangle. So we'll have to see if we get a hard break once it does reach that apex, and whether that break is to the upside or downside. I still believe it will be to the upside. Simply put, typically when you get a compression, you see the market moving to the prevalent trend direction. When we look at a longer term view of the market, we can certainly see that that is higher. Interesting action in silver. It opened below and closed below a critical and key area at 1760. That is the 38% Fibonacci retracement. You can see that right here. A break above this, and real resistance doesn't come in till about $19. It's these tops here. However, if we get any kind of downside action, support should be at the 50-day moving average, which is also the 50% retracement at $16.50. This volatility could increase this week in both gold and silver, and it is for that reason my recommendation is to remain neutral with no active trades in gold or silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.